Hey everybody, Economic Ninja here. I hope you're doing good. We have got a heck of a story to go over, and we're going to talk about mortgage rates, car loans, all kinds of crazy stuff, and what you can expect to see going into December, okay? So mark this one on your calendar. This is going to be interesting. And without further ado, let's go. Oh, wait, hold on. This isn't financial advice. I'm just a dude with a bro hawk a dream, and I wish I had a McDonald's coffee here. But seriously, come on, guys. You need to start caring about your money more than your financial advisor, because honestly, your financial advisor probably doesn't own his own car. You should ask him that. All right, guys, without that being said, let's just dive in. 10-year Treasury yields rise, trading at highest levels since 2008. This is amazing. It's almost so easy to figure out that we are in the crash right now. You see all of these inflation numbers as high, 40-year highs, the highest since the last crash, 1981-82, where inflation was spiking, and the Federal Reserve had to spike rates where a mortgage was like over 18%. Can you imagine that? You'll be able to pretty soon. My point being is that it's actually happening, and now you're seeing tons of data coming out that we haven't seen stuff this bad since 2008 during the Lehman Brothers crisis. That's because we're in a crisis. That is very, very simple. If you don't get that right now, if you have never seen this channel, I dare you to hit the subscribe button and the thumbs up. And the reason, well, you don't got to hit the thumbs up. Hit the down button twice. I'll get the point. Point being is this. You are going to see right now, you are in a collapse, and it is very serious. I say it with a smile because I've been getting ready for it for a long time, and I started a YouTube channel 2 years ago. It grew exponentially because I want to get you guys ready. I want you guys, I want a million, actually I want like 10 million people. Let's start small. I want 1 million people to be ready for this worldwide, to take it back from the banks. See, they want you, they know what they're doing actually. They actually do know what they're doing. I know it's like crazy, like, what are you guys doing? That's the dumbest monetary policy ever. Oh, don't worry, we got a plan. But I want actually 1 million people around the world, we're gonna start there. I want people to be out of debt or getting out of debt, have some cash on the side, have some inflation hedges like gold, silver, things like that, getting ready for this, and then pounce when the time is ready. And I want you guys buying up real estate like you have never bought real estate before. I'm not joking. I used to flip real estate in the early 2000s, sold all my real estate, even my my long-term holdings, my cash flow real estate in 2006, mid-2006, because I saw this crazy crash coming that everyone thought I was nuts at. But guess what? I've been talking about it for 2 years. We're in the middle of it right now. Put down in the comment section below if you've been following this channel since, 50,000 subscribers, and let the people know what's been going on with Ninja Nation. And I'm sorry for the long intro, but it's very important, okay? Because this stuff is going down now, and I want people prepared and not scared, and we're going to take it back. BlackRock won't make it. I know that sounds crazy. All the people are like, you don't know, BlackRock's going to own the world. We're going to be eating crickets. No, you may eat crickets because you're broke, but we're not going to do that. You guys got that? All right. We're not going to be eating crickets because we're prepared, not scared. We're smart. We're not total tools. We're going to, yeah, is that the right thing? Okay. All right. So that's what we're supposed to say. Okay, cool. Because we're going to crush it. All right, here we go. 10-year Treasury yields rises, trading at the highest level since 2008. 10-year Treasury sitting right now, as the recording of this, is 4.165, I think. It says right here, Treasury yields rose on Thursday after surging to highs not seen before in a decade in the previous session. The yield on the policy-sensitive 2-year Treasury was last at 4.89%, after rising by more than 3 basis points. The benchmark 10-year Treasury yield was up nearly 3 basis points, 4.157. Yeah, that's right. That was a high estimate. It wasn't It wasn't that high. Yeah, so it's 4.157. It climbed as high as 4.18 overnight, reaching levels last seen over 14 years ago in mid-2008. And I don't know if you guys were around investing in mid-2008. I was. It was pretty brutal, I'm not going to lie. So if you're a millennial, this is bad right now, okay? This right now where you're at, these were levels not seen since then. Well, homes weren't as expensive back then as they were today. Cars were not as expensive back then as they were today. But guess what? We haven't gotten a lot of raises since then. No joke. Wages across the board, they haven't doubled since 2008. So that's really bad. That means people have less money per month in their pocket to pay for higher bills. And especially, I'll give you an example. Electricity in California, it's over tripled since 2008, all right, per kilowatt hour. All right, guys, here we go. So it says, on the economic front, initial jobless claims came in at 214,000, below the 230 expected by economists. Now, really interesting. Is the difference of 15,000, 16,000 jobs a big difference? In the grand scheme of things, it's not. It's nothing to be celebrated. buy, right? The other problem is that there are people actually out there now going back to the workforce. They're figuring out, oh crap, the stimulus money is running out. I don't have the money. I need to go back to work. So, but I don't see that as like this thing that we should be celebrating right now. However, the Philadelphia Fed manufacturing index slowed a larger than expected decline. And that is very simple to explain, and that is because people have less money, so they're buying less goods, and they're slowing the manufacturing of goods, right? That is very alarming. The U.S. housing starts and building permits data for September came in below expectations on Wednesday. To say below expectations is an understatement. If you guys want information on that, the Real Estate Ninja, I don't like to talk about him very often. It's just Real Estate Ninja. At least I'm the economic ninja, but Real Estate Ninja, it's a YouTube channel, just did a whole video on housing starts and how they're plummeting, but actually a certain portion of housing permits actually went up, and it's because people are poor, and that's multifamily. But I don't want to tell his side of the story. Just go check him out. He's pretty good looking dude, though, I'm not gonna lie. All right, many investors are concerned about the economy contract. You know what, I'll just put a link below. All right, if you wanna check it out. Many investors have been concerned about the economy contracting as the Federal Reserve has been hiking interest rates to fight persistent inflation. Good job, Jay Powell. You're actually not doing a good job at all, because last year when you said, I'm gonna do it, I'm gonna get on top of inflation, it's December of 2021 and I'm gonna do it in 3 months. Oh wait, no, 4 months. That's it, 4 months, we're gonna totally do it. So you see, that's the thing, they don't actually wanna get on top of it because they actually want you guys poor. And that's why it's super important that you get out of debt, you build up some cash, you have some inflation hedges, and then you go crush the mountain. When all the bankers are like, we're gonna go get it now, Ninja Nation goes, yeah, hold my beer and watch this. We're gonna do this. We're gonna beat you guys the punch. I know it's gonna sound crazy, but I do truly mean that. And I want 1 million people prepared around the world to go and take the mountain. And I believe we're gonna take the mountain. All right, I'll be your financial cheerleader. It says another 75-point basis hike is expected from the central bank at its next meeting on November 1st and 2nd. And actually, I believe that's going to happen. And this is why. A lot of people are now thinking this is going to be 1 because inflation came in red hot. Core CPI came in at 6.6%. That is a very, very high number for core PCI. That's not even the right term. I'm blanking out. Anyway, it's very high rate, and people are going, okay, they're going to get even hotter. If this is a hotter number, Jay Powell's going to get hotter with his inflation number. The problem is this: Jay Powell knows he's collapsing the economy, right? Because the Federal Reserve has been giving, literally monetary heroin, just right to the veins since 2001, and the last couple times they tried to raise rates, from 2004 to 2006, and then later in 2015 to 2018, the economy couldn't take it. Like, no, Daddy, we want more cheap money. And Daddy's like, oh crap, what did I do? I should not have given you all those Frosted Flakes. I know the Tony the Tiger looked amazing, but now you're running around the place like crazy and I can't even catch you. That's what's exactly going on with the economy. It's like, oh, wait, don't touch that, don't pick up that. Oh crap, Mom's gonna get pissed. The realization is that we've been eating monetary Frosted Flakes. Put down in the comment section if you like Frosted Flakes. I'm not gonna lie, I do. You can tell by the looks of me, I like Frosted Flakes. We have a serious problem. And a lot of people, and some people, just some people, there's a few tools out there in the world economic system that go, I cannot believe that you would just like enjoy this right now. But when you see these patterns, they're very easy to identify because they repeat themselves throughout monetary history. It's very, very simple. Now, this one is the mama of big ones because we're in a 100-year cycle, all right? And it's very, very serious. Like what we just saw since September 22nd, we've seen 3 sovereign currencies go, we're done. We need to intervene in our currency because it's collapsing. And 2 of them said, we're gonna start selling US treasuries too, putting even more upward pressure on our treasury market, our interest rates. Then we've also seen one of the largest banks in the world go, we're totally good next week. We're not good. And then the whole country of Switzerland needs a credit line. I mean, if people don't understand what's going on, to say this is bigger than 2008 is an understatement. But a lot of people don't see it. Now you see it because you've made it to 9.23 minutes and seconds on this video. So either you're bored or you're mowing your lawn and you're like, I can't turn this dude off. Like, how do I get this thing? Like, why is my Bluetooth still running? Or you guys get it and you're going, oh my gosh, this is serious stuff, but I'm getting pumped. See, a lot of people get scared. They hear this stuff like, this is scary stuff. No, this is the greatest opportunity of your life. Get that through your mind. Like this should literally get you pumped. And no matter where you are, I don't want to hear someone go, but I'm not ready. Do you have a silver quarter, a silver dime? Yeah? Okay, you're getting ready. Can you go in that one next week? Well, I might have to sell my stuff. Well, do you use your stuff? Go sell it. I know it sounds crazy. That's not financial advice, because maybe you really want to keep those Legos in the bin. Legos are cool. Or maybe you go, I don't need those. Let me sell the Legos to someone that doesn't know what's going on. I'll take that. And I'll go buy some extra food. I'll go buy some silver. I'll pay off a debt. You know, how many people can just walk into their garage right now and go, I mean, that's literally why I started that side hustle course. It's so important to like start something small, start a side hustle. So you have, in case you lose your job during this thing, you can actually go and have some money, another skill to back up on. How many people are out there hustling right now? I hear it from you guys all the time. Like, I just started a business. I've got $10,000 cash in my pocket right now. I've never even had that in my savings account. It's been like 6 months. Thank you so much. That's the greatest compliment I could ever have. And I thank you for even trying and believing in yourself. And I'm going to be honest with you, I believe in you. We are absolutely going to crush it in this next cycle. This is going to be the greatest movement in human history financially of the common man and woman. Notice that's all I said. Go out, take the mountain, and take back what was stolen from us literally centuries ago. Guys, I hope you have a great day. Thank you to all the new subscribers. Thank you for checking out that dude, Real Estate Ninja. Again, super smooth, suave guy, but I don't know, he's not my thing. All right, guys, with that being said, the Economic Ninja is out.